Wall Street isn't very pleased with this rule change that basically forces them to lend to whomever, even if they're principally against some of these companies that want investment.
Francine, exactly. Some of the companies that they'll now be effectively forced to lend to that you mentioned are controversial and ones they wouldn't otherwise are things like gun manufacturers and oil producers, especially in a time when we have so much of Wall Street and really the world focusing on ESG. This really undoes a lot of those efforts for these banks. So the rule comes from the OCC, the Office of Comptroller of Currency, Brian Brooks. And part of the reason there's so much anger around this is because it's coming so late in the Trump presidency, with only a few days left, when Wall Street is used to getting its way with the Trump administration. One of the top trade groups for banks spoke out against that, saying the rule lacks both logic and legal basis. It ignores basic facts about how banking works, and it will undermine the safety and soundness of the banks. He goes on to say it is unlikely to withstand scrutiny. Really interesting there, concentrating on the safety and soundness. Again, this is why we hear the argument for more sustainable types of investing. They're also upset with this Watchdog 2 over new regulation that makes their technology easier to access, likely bringing in more competition. So a lot of anger coming from Wall Street over these last-minute rules, Francine.
Dani, I imagine the Biden administration could actually reverse it very quickly, but I'm not too sure. Bank earnings also kicking off today. What are we expecting there?
Well, part of it is what commentary they'll say about the Biden administration. It'll be interesting to see if they do mention this rule. It's probably unlikely because it just happened. They probably need to process it before they're able to publicly speak about it. But they want to see, for example, what sort of commentary they'll say about Biden's stimulus plans, whether that seems to be something that will help banks. The other big thing will be trading. What analysts and investors are essentially looking out for is for banks to keep all of the good from 2020, which is trading, and lose all of the bad things like big loan losses, Francine.